Welcome back to the channel, everyone. Today I want to talk about how I think that we've just broken Citadel's secret algorithm and how this is incredibly bullish for AMC. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, you may remember this interview where Ken Griffin spoke about the use of his secret algorithm and how it takes advantage of human behavior and human psychology.
Many dynamics of how humans behave can be, in a sense, taken advantage of by technology. If we know how humans behave and we can predict that, we can use that to better position our portfolios. And a number of quantitative strategies rely upon human biases and behavior to be successful. So as we understand this, look at the recent Nobel Prize in behavioral economics. As we understand this, we will use computers in new and innovative ways to better drive the pricing of assets in financial markets.
So we know that for some time now, Citadel's algorithm has been taking advantage of human behavior, but I think over the weekend, we've just figured out a way how to crush and cripple this algorithm. So it all started from a tweet from Mahal where he said my 4-year-old was singing their ABCs, then said LMNOP, and I came up with the ticker symbol LMNOP, which looks like it's going to hit an all-time high here on Twitter. Corey obviously directed this over to Elon Musk, now one of the largest Twitter shareholders, to see just how broken all of these Twitter bots really are. Now, if you didn't quite get it, Dr. Trillions clarified and said it's a joke. It's not a real stock, but the sentiment bots are picking up on this new ticker symbol and promoting it the more we talk about it. He said soon there'll be posts all over Webull, Reddit and Yahoo talking about how great LMNOP is. Buy calls right now. So effectively this was a tactic to confuse and distract the bots away from AMC onto other stocks, maybe even stocks that don't exist, like LMNOP. We've known that for some time now, both Citadel's algorithm and JP Morgan's new product designed to protect hedge funds from retail investors have been taking advantage of retail investors for a long time. Therefore, if we can distract these algorithms and these products away from retail investors and away from AMC to new stocks like LMNOP, it will give AMC more room to run. When these hedge funds are more focused on other stocks like LMNOP, they won't be as focused on AMC and will be a lot more likely to make a mistake. Now that we've confused Citadel's algorithm and distracted it away from AMC, maybe many of the Citadel employees and the algorithm itself will be less focused on AMC and will leave more margin for error. So if you haven't already seen, over the last few days, all of these bots have gone from saying about how AMC is a very risky play to how LMNOP is the new stock that could go up 300% in the next 2 weeks. Therefore, these bots are obviously trying to distract retail investors away from AMC now to a new stock like LMNOP. That means that these bots and algorithms now believe they are succeeding from distracting retail investors away from AMC onto new stocks, and therefore their algorithm risk management section will believe that the risk of an AMC squeeze is now much, much lower. These algorithms now believe that retail investors are selling their AMC shares for LMNOP shares and are being less focused on the AMC movement. Now it looks like these bots have already started to direct message retail investors as well. One account called LMNOP Karen has said, "Hi friend, are you there? Can you talk to me about how your LMNOP shares are doing?" Wet Dirker also photoshopped the below Wall Street Journal article to say that high profile investors are betting big on LMNOP. This is again just to confuse those bots and algorithms even further, to convince these algorithms that retail investors don't like AMC anymore and are now investing in different stocks. Now obviously we know that this is a joke because LMNOP doesn't actually exist, it's not a real stock, and it's just a game being played by us, the retail investors, on these algorithms. But I think even though this started off as a joke, I think it's a lot more than that now. I think we have fully confused the algorithms, and the algorithms are now going to be less focused on AMC, leaving more of a margin for error and more room for an AMC squeeze. And now that these algorithms are less focused on AMC and more prone to make a mistake, I want to talk about what role gamma has during the squeeze and how a gamma squeeze could impact AMC. Guys, if you didn't already know, MooMoo have just increased the number of free stocks that you can receive when you sign up for MooMoo using the link in the description below. Right now you can currently get up to 6 free stocks valued up to $3,500 each, which is around $21,000 in free stocks. And MooMoo and Futu have just officially announced that Futu does not accept payment for order flow, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. MooMoo also recently won the award for Best Trading Platform at the FinTech Breakthrough Awards. MooMoo is incredibly easy to use, it's very customizable, and it will help you to trade like a pro. MooMoo also has tons of technical indicators and advanced charting tools. MooMoo publishes daily short selling data, position cost distribution, and much, much more. So guys, be sure to sign up to MooMoo using the link in the description below and make your first deposit to receive up to 6 free shares, because at the end of the day, everybody loves free money. This article comes directly from IG, which is an investing platform over in the UK, that says thanks to AMC and GameStop, gamma squeezes have received much attention this year. But what is a gamma squeeze? How does it differ from a short squeeze? And more importantly, how do you trade it? So it says when a trader buys or sells options, the market maker needs to have the means to provide the assets at the required price when the option is redeemed or exercised. It says market makers often take large positions in the market to counteract these large risks, aka a form of hedging. It says when the traders overwhelm the market or the market maker by buying or selling a specific asset in a large volume, it can cause the market maker to buy out or sell their positions, leading to a large volume of trades in the market. aka when retail investors buy tons and tons of call options, the market maker needs to hedge these positions by buying tons and tons of shares, potentially buying out the available supply of shares. And it says when the market maker buys out or sells out of their positions, they can cause a surge in the price of the underlying shares, known as a gamma squeeze. Obviously, if these market makers have to buy tons and tons of AMC shares, potentially millions, tens of millions, or even hundreds of millions of AMC shares, it can cause the price to run up massively. So obviously the idea is to force these market makers into buying tons and tons of shares by buying options that are either in the money or near to the money, and therefore meaning that the market makers have to hedge for them. And it says, so what causes a gamma squeeze? It says a gamma squeeze is caused by large trading volumes in one direction in a short space of time. aka when AMC is running up quite rapidly, it can cause a gamma squeeze and cause the price of AMC to explode. And it says when they buy or sell out of their positions in the underlying asset, it puts further pressure on the stock price due to the large volume. While market makers try to hold on and mitigate risk where possible, it's not always doable in a fast-paced, volatile market. So this is effectively exactly what happened back in January and June of 2021 when we overwhelmed the market makers and caused them to buy up tons and tons of AMC shares in a very short period of time. And now it says a gamma squeeze is similar to a short squeeze. However, unlike a short squeeze, a gamma squeeze is actually caused by the market maker themselves and not by the traders. We've obviously tried to cause a short squeeze in AMC for over a year now by buying and holding the shares, but somehow these market makers always seem to find more shares to borrow and more shares to lend out, preventing the short squeeze. But if we can overwhelm these market makers, we can force them to cause the gamma squeeze themselves, which would end up causing the AMC short squeeze. So it says the gamma squeeze is caused by erratic price movements and large trading volumes that cause the market maker to exit their trades or buy up tons of AMC shares. That can lead to a spike in the price due to the large volume traded during the gamma squeeze. But on the flip side, a short squeeze is similar in instance to the gamma squeeze, but it happens to the traders, not to the market maker themselves. In similar cases where the market moves sharply due to large trade volumes in a specific direction, it can force traders or hedge funds out of their positions. And that'll either be by choice due to their losses or even by a margin call. An action where your account is running out of money to cover your trades. The trader or hedge fund is then forced to sell or add additional funds to their trading account. And we can effectively combine the use of the gamma squeeze with the short squeeze. If we can effectively force these market makers out of their positions or force them to buy up tons and tons of AMC shares, that will skyrocket the AMC price, causing these margin calls on the hedge funds. Now we can have the short squeeze without the gamma squeeze because many of these hedge funds will likely end up being margin called during the market crash, but if we do combine the gamma squeeze with the short squeeze, we can amplify the damage and cause the squeeze faster. Effectively, I think us, the retail investors, will be in charge and will be in control of a gamma squeeze and can decide when it happens. But we as the retail investors aren't really in control of the short squeeze. That's going to be caused by external factors like a market crash. Although saying that, one of these external factors that could definitely cause the AMC short squeeze is the fact that Russia has now defaulted on its foreign debt, says S&P, or Standard & Poor's rating agency. So it says Russia has defaulted on its foreign debt because it offered bondholders payments in rubles, not in dollars, the credit ratings agency S&P has said. So Russia attempted to pay in rubles for $2 denominated bonds that matured on April 4th, S&P said in a note on Friday. The agency said this has amounted to a selective default because investors are unlikely to be able to convert this rubles into a dollar equivalent to the originally due amounts. So according to S&P, a selective default is declared when an entity has defaulted on a specific obligation, but not on its entire debt. Moscow has a grace period of 30 days from April 4th to make the payment of capital and interest, but S&P has said that it does not expect it will convert them into dollars given the Western sanctions. So if Russia fails to make these payments over the next 30 days, Russia will officially default on its debt, which would most definitely cause a market crash in the Russian markets, which would likely bleed over to the US markets as well. Now, there's also been a post on Reddit that says the Department of Justice is now wrapping up its investigation. Obviously, this is definitely a trust me bro source. The post doesn't say the outcome of their investigation, but it does say that over the next 2 weeks, we should know what the Department of Justice has decided. He says, although I do not know the results of their investigation, I can say that the Department of Justice apparently has what it needs to move forward with prosecution. One arm of their investigation is wrapping up, and we should hear something from them in the next 2 weeks. He says, not a trust me bro source, but it definitely is, but he says it's straight from somebody involved. Now again, obviously I don't know the outcome of this Department of Justice investigation, but hopefully we should hear over the next 2 weeks exactly what prosecutions are going to take place. And finally, it looks like another big public name, Bill Pult, who has 3.2 million followers, said on Superstock that I support this movement because we need to expose the greed and the corruption. He said it's so deep, so pervasive, and believe me, I've seen it firsthand in Fortune 500 companies, and you guys are exposing it, so I'm in for that. I do think this is brilliant that we're getting more very large names like Bill Pult on the case, helping to expose market corruption. So guys, be sure to let me know down in the comments below whether you think that we've just broken Citadel's secret algorithm and how you think this could impact the AMC squeeze. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.